If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's May 1st, 2020, and today is Friday morning. So looking at the major economic events of the day, just one event coming out of the United States, ISM manufacturing PMI number coming out, and that will be at 4 p.m. South African time. Now, looking at the markets, we saw the euro actually push higher versus the dollar yesterday after the main refinancing rate came out, and the Aussie dollar retraces after leading the pack. Now, looking at the Dow Jones, we had a major reversal yesterday. Market went all the way to 24,700-ish level and then gave it all back, and we're now trading at about 1,000 points less as the markets have reversed their current gains. Now, looking at the commodity, gold ranges lower as oil continues to gain, but the question is how much further. Now, looking at the stocks, yesterday, Apple and Amazon came out with earning reports. Yes, they were in line with the sales. However, speaking about the future, they're very uncertain. And the markets, as you know, don't like uncertainty. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look here at the EURUSD at a 4-hour chart. And pretty much you see this nice little spike, about 70 to 80 pip spike here from 108.77, breaking that range, which we were in that range for quite some time, into this next range, okay, of 109-ish level. Now, the next real resistance-ish level is 110. However, what was previous resistance might be subsequent support. So if it does not continue this momentum, we may see it test this 108.77 going into this week. Now, looking at the Aussie USD, as it's made a little bit of a correction here after having a nice little rally. And so what was previous support, okay, what was previous resistance, is subsequent support. So it may bounce off of this level, 64.57-ish level for a nice little bounce. Okay, so something to consider. However, if we do break this, we may see it at the 63.44-ish area. Okay, that's the next real contention area there. Now, jumping into gold. Now, this was a little bit of a surprise yesterday, especially since the market sold off. I would have expected gold to sustain itself. But remember, we're not in an environment where we're looking for adverse equity to put our money in, because if the pandemic is affecting the markets, affecting all the markets, even gold. Okay, so with that said, we are trading at support here at 1675, which we've had for quite some time. Now, if we don't, I'm judging from these massive bars going down, I would suffice it to say that we will test this on the downside and perhaps get to the low 1600s level sooner than later. Okay, so something to consider here if we don't get this bounce and it continues to slide. Now, looking at oil, the past 2 days, this thing has flown, okay, from $10 a barrel to about $20 a barrel. Massive, well, quote unquote rally, okay, as we call it. Now, we are at a previous support level and a subsequent resistance level. So I do expect a little bit of a correction here. Now, how much of a correction? Maybe to the 1680-ish level, somewhere around there, I would expect it. However, if it does break above this $20 range, then our next real resistance is 25. So we have a little bit of leeway there on both sides. Now, jumping into the Dow Jones, this was a massive move. Let's first look at a 4-hour chart. Let's take a 1-hour chart. That's a little bit better. There we go. 23,851 is what we're trading with right now. Now, the markets pre-market yesterday rallied all the way to 24,791. That is a 1,000-point move. Okay, that is a massive move to push us higher. Now, if I mentioned this earlier, if you looked at the volume here, it was low volume, not a lot of volume. However, if you look at the sell volume right here, okay, compared to where we were selling, a lot of volume. So there's a lot of selling in this area. Now, a couple of points to mention here. Okay, a lot of the strategists that I've been looking at have been comparing this graph to what was looking in 1930s, 1929, where the market crashed. That's the famous market crash that happened. And it looks very similar to this, okay? We had a massive retracement. We had a 50% jump and then a massive retracement on the way down again. Okay, so that may still happen. Now, it'll take some time. There's a few variables to see if that actually frustrates in the next 60 to 100 days. And the reason of being is, number one, how the easing of the lockdowns are actually going to affect the markets either positively or negatively, okay? Whether or not these cases happen again, okay, and they mushroom out of proportion once again, and then everybody's going to have to go back into lockdown. That's a possible scenario. Number two, possibly and hopefully they will have a vaccine, even if it's in 6, 7, 8 months from now or 9 months from now. Okay, at least it's something to look forward to. So the markets, again, don't like uncertainty. And right now, we are in uncertain times. Okay, so until we have some sort of clarity as to where this pandemic will actually finish, I think the markets will react towards it as well. Now, lastly, it's whether or not this treatment from Gilead Sciences actually proves to be effective with treating the COVID-19. So there's a few variables here that it may happen or it may not happen, this resurgence or this resurrection of the 1930s in this graph. Okay, so something to consider and keep in the back of your head as this actually unfolds into the next 60 to 100 days. Okay, it really will have to look into the next couple of days. Now, looking at Apple and Amazon, it sold into its highs towards the end of the day. In aftermarket hours, it actually sold off over 100 points in Amazon, and in Apple, it sold off over 5 points. So, there's going to be a correction. Both the CEOs of Apple and Amazon both mentioned that although they hit their targets because, consumer spending was higher, live streaming of videos was higher and compensated for the lack of sales in iPhones, but moving forward, they're really uncertain. The reason they are uncertain is because everybody else is uncertain. So there's still a lot of uncertainty in the markets. I wouldn't be surprised if we tested our lows once again in the next 30 to 60 days. It could really happen as we're looking at the markets right now. This is Fred Razak. I want to wish you guys a great trading day and a beautiful weekend.